Hello everyone, thanks so much for joining the webinar today. Today's topic is Safe Harbor 401k. Don't miss the boat on tax savings. My name is Chris Jasinski. I'm with our business development team here at Ubiquity Retirement and Savings, and I'll be your host. So without further ado, let's get into it and take a look at the agenda. So we'll be touching on some key topics here today during the webinar. First off, what's so safe about Safe Harbor? Some key advantages you'll want to take note of as you're reviewing this option for your clients. A few important deadlines, and then we'll have a brief introduction to Ubiquity, some of our 401k plan options, and of course our contact information if you want to reach out and learn more. So, what's so safe about a safe harbor? And as a financial advisor, we know that your focus is growing your clients' portfolios and really building out their wealth. But a common question that advisors come to us with is when they have a small business owner that's looking for the tax advantages of a 401k, how do they as the employer take advantage of that alongside their employees? So for that, we have a safe harbor provision in our 401k plans. And a safe harbor is really, it's a feature in the 401k whereby the employer will regularly contribute a predetermined amount of money into an employee's retirement account. And you can see below at the screen there's a couple different formulas that you can use to do so. What's probably the most common is a matching contribution. So this is a type of contribution where the employer only contributes to the employee's account if the employee does so first. And you can see there's a couple of formulas that we have here at Ubiquity that are pretty common. I would say probably the most common is the dollar-to-dollar match, up to 4% of the employee's annual income. You can also see that there's a non-elective contribution option as well. So that's a case where the employer will just contribute a set amount to the employee's account regardless of whether or not the employee actually contributes anything to their own safe harbor plan. So it's really important to review some of the key advantages to why Safe Harbor can be such a booster to the 401k for all parties involved. Let's start with the employee. First off, the obvious advantage to the employee is that it's free money, right? If I'm an employee at a company and I'm only contributing 4% to my account, okay, it's a fair amount. But if my employer offers a 4% dollar-for-dollar Safe Harbor match, my money all of a sudden doubles in my account every payroll period that it's going into my 401k. So it really acts as a good psychological incentive for the employee to save more. And to boot, these funds are immediately vested. So, with a profit-sharing plan, for example, if I'm the employer and I'm putting profit-sharing funds into my employee's account, I can subject those funds to a vesting schedule. So, the employee might need to wait, 2, 3, or 4 years before they realize the full benefit of those employer contributions. With Safe Harbor, it's not the case. Those funds are immediately vested. The employee immediately has access to them and they go right into their account. For the employer, and this is a real big one that you'll want to note for your clients when you're talking with them about their different options for a 401k, one of the biggest reasons an employer gets a Safe Harbor match provision for their 401k plan is because it exempts their plan from complex annual non-discrimination testing. And this can be a real pain for them every year if they don't have a Safe Harbor provision with their 401k. The IRS subjects all 401k plans to testing every year, and they make sure that the plans don't overly discriminate towards highly compensated employees. If they do, the plan might fail testing, and there might be a big headache for the employer. So it's really important if the employer might have some highly compensated employees that really want to contribute a lot to their 401k, or maybe even they themselves want to contribute to their 401k as the employer, having a Safe Harbor in place is a great way to avoid this headache when testing season comes around. Another big perk is that these funds can be deducted from corporate taxes. So any employer contribution made into an employee's 401k account can be deducted from their corporate taxes, which is great. Even if the employer is a participant in the plan, the money they use to match their own account can actually be deducted as well. So it's an additional advantage for the employer. And lastly, for you as the advisor, most importantly, it gives you peace of mind, right? It's going to save you time on compliance resources. This is a really big deal because typically when a plan fails testing, the first person the employer is going to call is you, their advisor. So in order to cut down on the amount of phone calls and angry participants you might be working with throughout that process, having a safe harbor offers you a good silver bullet to give you peace of mind and not have to worry about that when testing season comes around, especially for the highly compensated employees. If the plan is found to fail testing, typically what happens is whoever over-contributed, and it's typically a highly compensated employee or the employer, they'll have to often take that money back and it will remain uninvested. So this will help highly compensated employees and the employer avoid nasty surprises. And then lastly, a huge key advantage to our advisors is that having a safe harbor match is a major boost to plan assets. Take, for example, the employee that was contributing 4% earlier into their own 401k account. If the employer is matching those funds, then that's effectively an 8% deferral rate. So it really increases contribution rates and annual flows to the plan. So a few key deadlines we want to make you aware of for Safe Harbor as this season comes up. So for a new Safe Harbor 401k plan, this is a brand new 401k that wants to establish a Safe Harbor. The client must establish the plan and deliver the Safe Harbor notice, which is provided by us at Ubiquity, to employees by October 1st, 2019. However, we try to give a deadline of establishing the plan for the client by at least September 20th, 2019. That really gives us a good window to make sure that the employer has enough time to distribute those notices, typically by email, to all of their employees. We get a lot of clients that come through around this time of year looking to establish a new Safe Harbor 401k. So we can't stress enough, get to us as early as possible for a consultation. We'll walk you through the process and let you know what you and your client need to expect. For an existing 401k plan, who wants to convert to Ubiquity, the process is a little bit different, and it really is going to depend on the existing provisions in the plan. Broadly, we would say that please consult with us beginning no later than late August or early September. It's really important to get the ball rolling on this process as soon as possible so that we can help accommodate your client's plan provisions that they might want when they come over to our platform, and also so that we have enough time to notify employees about what's going to be happening with the plan during that time of converting the plan assets. So a bit about Ubiquity now that we've covered Safe Harbor on a high level. Really since day one we've been focusing on providing digital and affordable web-based retirement solutions exclusively to the small business. Now when we say small business, typically we're talking about companies with fewer than 100 employees. So really those small shops are what we love working with, and we've been doing that since '99. We really rely on our technology and automation to make 401k easy to administer and set up for the employer. We realize that small business owners tend to wear a lot of hats at their companies, and working on 401k for a very long time, every payroll period, is something they probably don't want to be involving themselves with. So making this as easy as possible for them to set up and administer is our number one goal here. So a few things that you might also want to know about us that you might find of interest. Since 1999, we've helped savers contribute over $2.5 billion towards their retirement. We've always believed in full transparency in our pricing, and really we set a standard for the industry by being an only flat fee provider. When we did that in 1999, we were one of the few, and now people are trying to replicate that pricing model. But for us, that's been consistent throughout, that we don't take an asset-based fee, and as your client's assets grow, our compensation and what we charge stays the same. And then lastly, we offer flexibility when it comes to investments. We have a lot of advisors that like to use our open architecture platform. We're more than happy to give you and your client access to that and true flexibility when it comes to their investment options. And we have advisors that say, you know what, I want to work with a third party and bring in maybe a 338 partner to help me with the selection and ongoing investment management. And we offer options for those solutions as well. So true flexibility when it comes to investments. We can let you go at it and craft your own lineups and portfolios, or if you want to bring in some outside expertise and focus on the financial coaching and educating the employees, we're more than happy to accommodate a variety of relationships. So really high level, I'm not going to read all this here on the slide, but to touch really briefly on our 4 different levels of 401k options. We've got single K all the way to the left, which is a great option for a sole proprietor. So this is really our owner-only 401k. And if they have a spouse or a business partner, they can include them in that plan. We have Saver K, which is one of our full-service 401ks, and it's really our plug-and-play, off-the-shelf option for the unsophisticated 401k buyer. So it's a really great option, and it's low cost too for you and your client. We get a bit more flexibility when it comes to Express K in terms of plan design. And generally it's good for any company between 2 and 100 employees. And then lastly, we have Custom K, which offers what it sounds like, full customizability in terms of plan design, plan provisions, and meeting the needs of your client's small business. So that's all we have for you today. We really appreciate you taking some time to listen to this presentation. Here's some contact information if you have more questions or are maybe interested in getting a quote for your client or starting that client assessment now before Safe Harbor season is up in full swing. So again, my name is Chris Jasinski. You can see my contact information here, but you can also contact our partnership support and sales team if you have any more questions. We really appreciate you joining us today, and thanks so much.